everybody, and welcome to the 12th edition of LM's Weekly Wrap, our weekly program to cover all the events, developments which have impacted the markets, encompassing the global markets as well as the domestic markets. This week has been a very volatile week of sorts. There have been a lot of global cues. There have been a lot of global developments, commentary relating to the Federal Reserve, which has impacted the US markets as well as the domestic markets. So first of all, we will be covering the global markets, and then we will be coming to the sector-wise allocation, sector-wise developments, as well as the quarterly results updates, which is the quarterly earnings season which has started. With me, as usual, is Jash, Senior Equity Research Analyst at LM. And welcome, Jash, and we can have a start of the global developments.
Thank you, sir. Very pleased to be here in front of you. And so basically, we are, as usual, going to start with global markets and then dive into the domestic markets. But it goes hand in hand.
Yes.
So if we see this week, there was a strong start, but it gave up gains, our indices. And then also today was also very volatile, and that is because of a few global reasons. Majorly Fed, the commentary of Fed yesterday before its core inflation data, they indicated a 75 basis points hike, because of which the Dow crashed 800 points. And then they also said that that's going to happen in November and it is going to be followed in December. After that, the inflation data came in and it was at a record high. It is at a 40-year high. It is at 8.8%. It is slightly better than what they had anticipated, but it is still very high. They also said that mild recession is better than stagflation. So because of those comments, the investors in the global market started cheering, and there was a complete reversal in Dow.
Relief rally.
There was a relief rally in Dow, and it started moving up. And the same way, if we go to see Nifty, 3 days it has been trying to hold on 17,000 point. It goes down below to 16,950. But even though it manages to stay above 17,000, today it opened with a gap of 300 points, gap up opening of 300 points. But it has given up some of the gains. It is right now at 70,100, 200 levels. So I would say that this is a relief rally. We should still stay cautious. And I feel the data for festive season is very good. If we go to see the consumption theme that we've been talking about, the mobile sales in the Great Indian Festival, they used to be selling 1,100 mobiles a minute. There was a complete turnover of 11,000 crore worth of mobiles were sold in the festival. That is a very promising data. Also, Diwali, they have predicted that Diwali sales are going to reach $12 billion. That is a big number. It shows that how resilient our market is, and there is going to be huge amount of consumption. Adding to that, the first week of online sales, the festival, they're clocked in $6 billion revenue. So I think that's a silver lining for us, and that is very convincing for us that we should still stay bull in the market, though we should be cautious, but still stay bull. Also, there's one very fun fact that I want you to know, that is the Japanese bond market. There's a black swan event that is happening. In this week, there was a day where there was zero trades in that market, and it is known to be the most liquid bond market in the world. So there are some very big structural changes happening in the world, and I think it's interesting to see how it's going to unfold. And for stock specific and sector specific, I'm going to hand over to Nirav, sir.
Yeah, thank you, Jash, for the good, wonderful insights which you have shared with us relating to the global markets. So just to add, I will want to discuss one thing, that we are getting very confusing kind of signals from the US market. So one thing what is very clear is that they want price stability, which we have reiterated on various programs, that the priority of Fed is price stability. They want to control the inflation at any cost. And for that, as Jash also pointed out, that a mild recession will do as compared to a stagflation. So they are ready to sacrifice some growth for the sake of protecting their economy. So this is one factor. Dollar.
I think that will help them to bounce back faster.
Yes. Dollar gaining strength against all the currencies across the globe, and I think in this the emerging markets and particularly Asia have been worst hit, and Europe is, as it is, reeling under a lot of pressure because of the high energy cost and the war which is going on. So the global picture is still not very good.
Adding on the currency front, INR USD has been losing its strength, but it is still stronger than pound and euro.
Yes.
So that is also very amusing for Indian market.
But a worrisome thing is that a lot of Asian Asian markets, they have Asian economies. They have been exhausting their forex reserves in trying to protect their currencies, and all this has been a kind of a futile exercise. It's been an exercise in vain. But nonetheless, this is about the global picture and the domestic picture. But we quickly go on to the sector wise, because that is of interest to the market.
Yes,
all our viewers.
As the earnings season is also beginning.
Yes. So to start off first with the earnings season, we start off first with the earnings season. As usual, the early birds are the IT sector stocks, and there was a lot of pressure on the IT stocks. The IT stocks have corrected significantly in the recent past, and this week we had a reasonably decent start to the earnings season. We saw Infosys, TCS, Wipro, HCL Technologies declare their numbers. We also saw some mid-cap companies like Mindtree, Civant. They've also declared their numbers. An important observation is that most of these companies have the management commentary has been pretty decent. It's been pretty strong. That the demand continues to be very, very strong. It's very strong across all the verticals. It's quite strong across all the geographies. Another important factor is that the supply side constraints which were there, the supply side challenges which were there, the headwinds which were there, have been easing out slowly. The cost optimization is taking place. The operating leverage is there in place. There is the attrition rates which were there. They also seem to have peaked in Q2. And from here onwards, the IT companies expect that the costs will stabilize from here. There is likely to be a plateauing of the subcontracting costs. There is also likely to be a reduction in the fresher costs, because IT is essentially a manpower intensive industry. So we've got good commentary coming in from the IT companies.
So I think that is again contrary to the mixed signals that is given from the US markets.
Yes, because it is totally dependent on the orders. As
Correct.
we all know, that North America gives the biggest business
orders.
to the IT companies. So if the company over there, if the client spending gets reduced, then it is definitely going to impact the IT companies. So analysts and experts, they are taking all this commentary with a kind of pinch of salt, and still the cautious outlook is there with respect to the IT companies.
Yeah, cautious outlook is there, but the companies are not showing it. So that's a very big mixed signal.
So we saw this week HCL Technologies and Infosys. They went up quite a lot. I mean, there was a good handsome appreciation in these stocks. We saw Mindtree also performing quite well in the market. Civant was a kind of a disappointment, and today as we talk, I think TCS has slipped into the red as far as today's trade is concerned. But overall, I think we have seen some kind of relief which is happening as far as the IT sector stocks are concerned. Second, we come to the auto sector. Auto sector has been kind of quiet. I think it's waiting for more data points to emerge as far as the festival demand is concerned. And after the beginning of the month, where we had the auto sales numbers, where the market has reacted quite positively, I think now it is waiting for more cues, more data to emerge from the festival sales.
I think the first point is going to be today, as the Bajaj Auto result is going to be there today.
Yes,
so we'll get a slight idea and
we get a slight idea about what is going to
what
happen.
is going to happen.
And I think two-wheeler stocks, especially Bajaj Auto and Hero MotoCorp, have been under quite some pressure because Bajaj Auto depends a lot on exports.
That's right.
And
The
most of
Africa and the Latin American
African countries. And they have been very clear that some markets like Sri Lanka, Bangladesh are under a lot of strain.
So one of their biggest markets is Egypt, and
Yes.
Egypt is also in an energy crisis.
They have banned three-wheelers
That's right,
which were being exported. So these are some factors which need to be kept in mind. The third sector which we are covering is banking, and I think banking is seems to be in a quite sweet spot because we've seen credit demand beginning to look up. The credit demand has started picking up slowly. We've seen good amount of retail credit picking up. Corporate credit is also showing signs of picking up. Today we've seen very good numbers being announced by Federal Bank. In line with what was the quarterly updates given by a lot of banks, and at that time also a lot of quarterly updates by smaller banks like IDFC First Bank or RBL Bank was also quite positive. So I think banking is going to be in a good spot. Today we had handsome gains in ICICI Bank. This week we've seen good performance from Axis Bank and Kotak Mahindra Bank. So I think overall it's a healthy picture as far as banking is concerned. Then of course we come to the FMCG sector. FMCG sector has been largely quiet, and I think it's also waiting for more cues on the festival demand, how the festival demand is going to play
One
out.
more point to put on FMCG sector. The September months saw a slightly dip in the FMCG sales as the Kirana stores and everyone are waiting for Diwali to stock up new goods. So I think we will see some action in FMCG during Diwali or after Diwali.
Yeah, a couple of factors to watch out for in FMCG is that while the inflation continues to be quite sticky, the urban demand and the discretionary spending has been strong, but the rural demand
yes.
has been quite muted. So this is one factor.
So rural is also because of the Kharif sowing, which was very weak this year. So we need to wait and watch.
We need to wait and watch. And most of the companies, in the commentary, they have indicated that they have used high cost inventory during this the second quarter. So when you are consuming high cost inventory during the quarter, and at the same time some companies have had to give promotions, they have had to do some discounts in order to push the volumes and in order to protect the market share. So expect that this quarter will be a soft quarter as far as the margins are concerned with respect to FMCG, but we have to see whether the demand is picking up from Q3 as well as in the festival season. So that's
Q3 is one of their strongest quarters anyways.
Yes. Yeah. So this is with respect to FMCG. With then we come to pharma. In pharma, I think this week has been strong, particularly with respect to Sun Pharma. I think Sun Pharma has been a big gainer in this week, and we expect a couple of stocks like Cipla, Dr. Reddy's, and in the mid cap space we have Divi's Labs. Laurus Labs, they're expected to do quite well in the near future. Then of course we come to the capital goods and the infra space. I think this month was quite eventful as far as L&T is concerned. I think there was very strong, significant order wins for Larsen & Toubro. They've won an important contract for constructing a state-of-the-art factory in Haryana from an automobile major. They've got a good order from Reliance Life Sciences for constructing their facility. They've got a good transmission line order, a prestigious transmission line order in Gujarat. Today, as we talk, the company has declared some prestigious order wins in the water and the affluent treatment space. So I think we've seen some good movement in this stock, and in particularly in the power space, this week we've seen some big good gains, some decent gains happening in stocks like NTPC, Power Grid Corporation, and Coal India Limited. So there's been some good traction in that space also. Finally, I think there's going to be a lot of festival demand, as Jash rightly pointed out. It's going to be exciting to watch. Because there's been pent up demand. There has been a kind of there has been a pandemic related 2 years where people did not spend, but they are looking forward to the festival season. So to that extent, I think the Indian markets might just manage to decouple themselves from the global markets. So that is something which we'll have to watch out for. More important, of course, will also be the management commentary relating to Q2, what the companies are indicating. A lot of diverse companies, diverse sectors will declare their results over the next 1 week. So we'll keep you posted, of course, on those developments. And a couple of things more to discuss. The first thing is that LM weekenders continue to perform quite well. We've at the beginning of this week, we had a couple of companies which achieved their targets. One is Jyoti Laboratories, and the second is RK Forge, that is Ramakrishna Forge. We continue to like these companies, although we had recommended these companies quite early. So we have given a 50% profit booking call over there. But as we have been indicating that it's better to concentrate on good companies. Some of the LM weekender stocks like Jyoti Laboratories or Action Construction Equipment, Titagar Wagons, Bharat Electronics, Midhani Mishra Dhatu Nigam Limited, Ramakrishna Forge, and HBL Power Systems, Schneider Electric, Salzer Electronics. These are all some of the cases in point, some examples of some stocks which have performed exceptionally well. So watch out for these stocks. You can enter into these stocks, make good investments in fundamentally good companies. The second point which I wanted to make is that we'll also be coming out with LM's Diwali picks. So very soon we will be releasing them. We'll be giving a progress report of last year's picks, how they have performed, and of course we'll be giving some new ideas. This time we'll be sharing some new ideas also with you. Final part of our program, as we have said, consumption themes continue to do well. They're likely to do well. Watch out for retail stocks, watch out for hotel stocks, watch out for defense space. These are the stocks where one can see a very good amount of action and wealth generation. With this, I think that about kind of wraps up our program. Kindly do revert back to us with your feedback. We will also reply back to you. And thank you everybody, and looking forward to meeting you in the next week. Thank you, Jash.
Thank you.